Will the Aussie dollar crash to 60 cents? Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from originally Bloomberg and then Yahoo Finance picked it up. The Aussie eyes 60 cents after psychological technical level has been broken. And if we jump over to trading economics, let's go to the Forex. Let's look at the Aussie to USD. Oh, it's 63. Ah, boy, 63,688, 91.88. So, yes, it's the dollar, well, is heading down. Everyone, guys. There you go. There you go. Let's have a look at this article. So, the Australian dollar may fall to its weakest level against the greenback since markets were ravaged in the early days of the pandemic, after breaking a key technical and psychological support. The currency closed under 64 US cents for the second day on Tuesday. Well, now on Wednesday, it's worse than that. A level that marks a 61.8% Fibonacci pullback of its March 2020 to February 2021 rally. Further declines could see the dollar fall towards 60 US cents, unwinding the remainder of that advantage. So if we head to 60 cents, you've got to understand we are a very import-dependent country. We don't manufacture much here. Most of what we use, consume, and build with is imported, a lot more than some people may realize. And, well, hey, fuel's going to get more expensive too, isn't it, if the dollar goes down? So everything will go up. So we'll see inflation for imported goods due to increased costs, increased shipping costs, increased costs of the goods, because our purchasing power of our dollar will decrease. And, well, at least Australia as a destination will be more attractive. So foreigners wanting to buy houses or come on holidays or come here to study or people wanting to immigrate over here to work, all of that will appear more attractive as long as you get paid in US dollars when you come into work. The Aussie has slumped 11% against the greenback this year and dropped below the psychological 65 US cents level as the dollar rallied on bets the Federal Reserve will aggressively raise interest rates and as traders sought haven assets in anticipation of a potential recession. The currency has also weakened because of concern over slowing growth in China, Australia's largest trading partner. The Australian dollar is used as a proxy for the Chinese economy. Just bear that in mind. When we hear all the rhetoric about concerns and conflicts with Australia and China, FedEx traders use our dollar as a proxy for the entire Chinese economy. How does that make you feel, guys? The turmoil in global financial markets, lower metal prices, higher volatility, and weakening world economic outlook awaits on the Australian economy. Joseph Capurzo, head of international economics at Commonwealth Bank of Australia, wrote in a note to clients, CBA expects the currency to fall to 62% early next year. So there we go, everyone. Concern that the dollar is heading down. It's been some time since we were, 55 cents back then. Hang on, you can't see it there. 55 cents then. Here we're sitting at 65. So let's have a talk about this. This is part of the reason why I've wanted to diversify my investments to have some of them offshore, to have offshore investments in the US so I can get an income stream that's in US dollars. Purely for this reason, so I'm not completely dependent on the Aussie dollar. So, I mean, this is this thing. The problem is most of my work and everything is in Australian dollars, but that's how it is. You've got to look at what opportunities you can. This is going to have impacts here in Australia. We could see the Federal or the Reserve Bank increasing the cash rate to try and mitigate this fall in the Aussie dollar. We'll have to see how low it will go. And then that'll have implications on our housing market. It also means, as I said before, Australia will be more attractive for international students and as a holiday destination, which is a good thing. We want more people to come over here and spend their money. It also means our property is going to be more attractive for people with money from overseas. You know, they'll find a nice bargain. But it's going to hurt all of us here. Cost of living is going to get even higher. and more people are going to feel it. We also have the fuel excise coming back. Of course, you know, they can't cut a tax for a long time. Added to this, yeah, it's going to be awesome. What do you all think, guys? Let me know your thoughts and opinions on this one in the comments down below. Thank you for watching. Check out my other channel, HeiseBim and HeiseSays International, for other content I create. And if you're a fan and want to support us, there are a few ways you can, financially on YouTube or Patreon, using our referral links on Amazon, eBay, Independent Reserve, or AussieBroadband, buying our merch, or calling us if you need an architect. Take care, everyone. Have a great day, and I'll see you in the next episode of HeiseSays. What do you reckon? Will we see 40 cents again? 44 cents? Just like the old days, eh? Just like the old days.